what's left? 600 billion in value unaccounted for. It's basically robotics, right? I mean, you guys tell me, is there something I'm missing? Energy, somebody mentioned superchargers. There's not, a whole lot left. I mean, it feels like robotics is the main sort of gig here. I did a funny analysis in my head. Usually for biotech, what we do is we don't expense R&D because it's an investment. So when you expense R&D, you're really kind of penalizing the company when they're trying to create a valuable asset. So the R&D is you spend money on R&D to get a return. Otherwise you wouldn't spend it. Back to robotics. So let's say, the robot's $60,000. And when I say the robot, I'm sure they'll have all kinds of robots and this and that, but let's dumb it down and just say they're going to sell 60,000 robots and they're going to sell 1 million of them a year. Now, Musk has said that there are going to be more robots than people. So 1 million is very conservative. And given how much utility the robots could have, I mean, you could lease a robot, for example. If you can't afford buying one outright, maybe you could lease one for 10,000 a year and it could do all this work for you. So eventually, I do think this is what's going to happen. So 1 million is probably conservative, to be frank. But now you have 60 billion in revenue. And I don't know, let's say there'd be 30 billion in free cash flow. Put a 20x on that, you get 600. And so obviously if they do 10 million in robots, you could even lower the margins a little bit. You're talking about 5 trillion possible upside. Some of you may say this is all nonsense. None of it's going to happen. Put 0 down. So if you take the worst case for everything on Tesla, it's got a lot of downside. It's got basically 75% downside. If you look at the best case for everything on Tesla, you're then looking at I guess a 5x, something like that. So I sort of intentionally set this to equal to 0. So the current market cap is correct if the following are true. You should pay a 40 times multiple on the car business, which I think is reasonable. Robotaxi is worth 250, which again, you may disagree, but I think that's reasonable. And robotics is worth 600, which again, you can disagree, but I think it's reasonable. So between these 3 things, cars, robotaxi, and robots, it turns out that cars is just 1/3 of the picture. You're paying 2/3 of the picture. You're sort of paying for 2 startups. You're paying for a robotics startup and you're paying for a Waymo style robotaxi startup. Now, these are startups that have a lot of, it's the richest man in the world, the most successful entrepreneur ever, 1. And then 2, the robotaxi startup, they got a lot of cars out there. They know how to make cars, they know how to make software. So they got a big head start. And then on robots, they do AI well, but I think robots is the sort of the riskier bet. But it's also, what if there are 100 million robots? And they're $20,000 each, and the world is just androids, tons of robots walking around helping us with our daily activities. There's a company called Figure that just raised at 50 billion. So I think at the very least, you have to value Tesla, maybe at the very least 100 billion. Give it some credit for the robots, because a Figure, who's never sold a robot, is valued at 50 billion. Yeah, look, if you think Tesla's overvalued, you probably don't look at investing the way I do, at least. And I think that's, for obvious reasons, I think that's wrong. Because if you think all future opportunities aren't worth anything until you actually see the revenue earnings, well, you're necessarily completely undervaluing all future opportunities. That's not the right way to do it. If you look at Figure, look, this is cool. This could do something. The factories and homes could use these. So at 50 billion, the people putting money in Figure are not stupid. They're taking a risk. Figure will either be worth $1 trillion, it'll be worth 0. They're trying to do it, right? You have to look at Tesla the same way. It's VC that's public. Now again, would you pay 600 billion for Tesla while other people are paying 50 billion for Figure? Kind of makes Figure look cheap compared to Tesla. Tesla's got a big advantage. They got Elon Musk. That's a big deal. And they have a lot of capital. Figure's got to raise capital, hand to mouth. They have had AI for a long time, experts within the company, and they're used to making huge amounts of scale for machines, steel machines. It's certainly not real yet. It'll be a while before these machines will be around your house making you coffee and folding your laundry. That's still going to be some years. But the point is, if you follow AI closely, it really wouldn't be surprising if these machines could do all that, because they can do it in the text dimension. And the bet is, will their flexibility and utility in text transfer to the real world. And the real world's quite different from text. In some ways a lot more complex, but in other ways it's arguably not more complex. If you think about what requires more intelligence, folding laundry or doing quantum mechanics, writing the most complex programming that you've ever seen, writing assembly code in 1 second. I would say it's harder to do the assembly code, and that's why we pay people who can do that a lot more than we pay people who fold laundry. So I think you're going to have general purpose robotics. I don't think you're going to have like the old way of I think that the old way of thinking is that, yeah, these robots will do one thing really well if they're programmed to do that one thing. I don't think that's what's going to happen. That's already happened. That's the past. You know, once the Rubik's Cube, when OpenAI did the Rubik's Cube example, the Rubik's Cube is pretty hard. I can fold laundry better than I can do a Rubik's Cube. And it solves the Rubik's Cube in 1 second. If you guys haven't seen that, so there's been lots of progress since then. And, you know, basically the machine has to plan and like the tattoo. Okay, it's getting the feel. It's got the feel. Yeah, so ultimately, like if you tell OpenAI, you are in a room, you see the box, you know your goal is to move the box from here to there. OpenAI will tell you in text, okay, I move the box. So translating that textual world into the real world, I don't think it's gonna be that hard. You know, many people are working on it. That's why Figure is worth so much. Yeah, these have gotten better. I think the proof of concept, a human that knows how to solve a Rubik's Cube is fairly quick, but this is good too. Yeah, I mean, again, you know, that's the bet. I'm not saying that you have to bet that it's right or that it's gonna happen. I'm saying that you have to give it some probability of success. If you're certain that the probability is 0, well, you have to look at both Elon and say he's an idiot, and then you have to look at the people doing Figure and saying they're an idiot, and that's a tough bet to make. At least give it, you know, a 5% chance of working or something like that. This was longer than 5 years ago, actually. Yeah, you can't have too much hopium. I agree with that. You know, you don't want to turn into Cathie Wood, but you cannot completely disregard the future at all and say all these smart people working hard on this stuff, it's all for naught. You would have said that there's no way a machine can type to you and think, well, OpenAI is doing a lot of revenue now. The whole world's, you know, obsessed with this stuff. So, you know, you have to be open-minded. And again, you know, will we have general purpose robots this year? No, I don't think so. But you don't buy stocks for this year. You buy them for the perpetuity of the company's life. To say that we never will have general purpose robots, I mean, that's a crazy thing to say if you ask me. Now, will we have them in the next 5 years? I'd say that's more of a 50-50. Will we have them in the next 10 years? I gotta say that's close to 100%. I mean, 90%. There are some things that, you know, it's unclear if robots can plan well and things like that. But just looking how big the leaps were in LLMs in just a handful of years, it's sort of, you know, it did happen. So yeah, there you go. And I think it's faster now. Let's see if there's but again, these are general purpose robots. These are not general purpose robots. These are specifically trained to do one thing. That's not complicated. Less than 1 second. So it's not hard to have a machine do that. You know, that's why the OpenAI achievement was more impressive, because it was an actual hand.
Solving in 3, 2, 1. Oh yeah.
But, you know, the point of general purpose is that, you know, the machine can react to different situations and stuff like that. And look, you know, I think that in the next few years, you might buy one of these machines and you might say, stupid robot, it doesn't realize that the dog is in its way. Or the dog barks at it or whatever. That's just something that we're going to have to deal with first generation products the same way we dealt with the first generation cars were disasters. The first generation cars were, you know, awful. What I predicted is coming true, it looks like. It's sort of hard to make calls in the future. I mean, it's really hard. But, you know, I'd say that if Musk is putting his whole company's future on it, and some other guys you respect are doing that too, and then you also have some results like that result I just pointed out, you know, how do you not assign some probability? I'm not saying you got to go become a robotics investor or a big robotics fan, you know. And by the way, the Chinese have done some amazing stuff as well. Let's look. Figure did do a coffee demo. You know, and this didn't impress me that much, by the way. So, you know, this is right now, right? So again, I think this was trained on making the cup of coffee, so that's not that impressive. Like, to me, what would be impressive is if he said, okay, can you make me the coffee? Then open a bag of chips. And he did both. You know, that would be really impressive, but I don't think they can do that yet. Yeah, like this, for example, this is just reinforcement learning, right? Like, to me, this isn't that impressive. General purpose systems are a lot trickier. And there's many other companies other than just Figure. Yeah, Nebius is a cloud. I think the GPU cloud business will be fine. I just, you know, it's a very, very industrial kind of blocking and tackling type of business. No, I mean, the bigger the company, the easier it is to short. When, I mean, if a company is overvalued and it hasn't succeeded, the bigger the price, the better. But if the company's growing revenue, then maybe you shouldn't have shorted it in the first place. That was last year, exactly. Yeah, Apple's going to announce something. That'll be interesting. I guess this is some kind of more of a peripheral type thing. But I mean, that's a great question to ask, Card. I mean, that's why most people work at a firm that is investing across sectors. Very few people can keep all those details, can research all those details and keep them in mind. I mean, I'd say it's impossible. Yeah, I mean, A star plus a transformer, like RL subtasks, maybe that's good enough. I agree that we're not quite there. But again, these people are smart. They might figure it out. Nibble on a little bit. It does look like the quantum trade is finally going to pay us. Although, you know, they're both kind of melting down. Sometimes, you know, it'll dip really hard, rally, and then dip again. That's probably, you know, if I had to guess what's going to happen with very low certainty, that's usually kind of what's the AI stocks I like are private companies. I like OpenAI, actually. I think Rigetti dies faster than IONQ at this point. Yeah, it's hard to do private company analysis without the financials. And if a private company gives you financials, they probably don't want you to talk about it too much publicly. But yeah, you could do it. I like it when the volatility of these stocks is two-way. When it's against us, it's just volatile up. That's the worst. When it's just straight down, you know, that's great. But I don't mind it being volatile up and down. Yeah, this is usually pretty bearish. You know, when things are a little, you know, it's also like pretty hard to short a stock that's down 7% in unknown news. Yeah, I like to short stuff as it falls. You know, I don't like to, rather not fight it on the way up if I can help it, you know. But this doesn't look, this looks pretty unhealthy. Yeah, SMCI, you know, I covered my short. It's just obviously wrong on that one. And you just gotta, it's like unbelievable. You know what, I'll short some now. You know, I was saying last week, the stock gives you get a lot of chances with SMCI to make some money. And obviously, that's not been the case. It's been largely straight line up. I don't know much about Kohl's, sorry. You know, I was looking at, I did this analysis, this big Python script, downloaded every 13F for the last year, okay? What percentage of the market do you think hedge funds are? 8%, 10%, 3%? Yeah, chat's right. You know, it's roughly 5%. You know, it depends on how you look at it. But yeah, about 5%. 5% of the market can't suppress a stock. Look, the whole market's institutions. I mean, that's 95% of those institutions don't short. Now, the biggest players in the market are the index funds and some of the mutual funds like Fidelity. It's not all passive, but you know, it's a large part passive. And the point is, like, you know how the bigger hedge funds work? Like, they don't want risk. You know, they don't want. Like, they get out of risk so fast. Like, these funds are hilarious. Like, read anything about Millennium or, and look, it's worked for them, so I'm not dissing it. It's not the way I trade, but, you know, there's a reason these guys are managing more money and they're richer than God. The second they're down on a stock, they get out. Yeah, BlackRock and Fidelity are not hedge funds. Well, they want performance too, but they don't want risk. They don't evolve. You know, so ultimately, like, and I'm not necessarily lumping GameStop in there. He's like NWBO or like any of these other retail like. It's not that hedge funds are hurting these companies. It's that there's none of the longs want to buy it. You know, none of the $40 trillion of long only money looks at it and is like, yeah, we're not touching that. You know, $40 trillion of long only money, and you can't get anybody to buy your stock. Sad. The hedge funds or whatever. Dark pools, it just didn't make a difference. I don't think there's much going to happen on IONQ's earnings, but I could be wrong. I mean, they have to talk about guidance and stuff like that, and it's going to be hard for them to guide to very much. I mean, the product doesn't do anything. So they put guidance out, and like, how are they going to substantiate their valuation? I mean, no matter what guidance looks like, it's going to be hard to look at guidance and say, oh yeah, I really want to own this stock. You know, when the revenue number is What could they possibly say to get Wall Street excited? Okay, so Wall Street's saying 2025 will be 83 million in revenue. Well, IONQ gave some kind of... So what will... Unless IONQ says they're going to do 100 in revenue, even then, I'm not sure that's going to do the trick, but when did they announce this? Was it towards the end of... They made like a little public statement that their business was doing well. I thought it was like the beginning of the year. Oh, here it is. Yeah. Jan 10th. Yeah. So unless they throw out 100 million, the street is at 83 million, which I don't know how they hit that. So unless it's higher than that, the stock's going to get cracked. Now they could lie and say they'll do 100 million, but the stock's gone up so much that they have to do 100 million. And if the quarterly result is like, let's say the quarterly result is 14 million, how are they going to, or 10 million, 10, 11 million? How are they going to go from 11 million in one quarter to 25 million, which is what 100 requires you to do? Yeah, I think we should short more. Listen, it's all about the revenue. If they can't put up the revenue and get the customers, it's over. It's not a baby valuation anymore. If it's a baby valuation, it's like, okay, let's see how the technical achievements go. Like риgetti can kind of get away with that. Rigetti's revenue is a little less important, but IONQ has to put up numbers. It's 100 times sales, right? 7.5 billion market cap. So even if they guide to 100 in revenue, which there's no possible way they do 100 in revenue. They just lie and say we're going to do 100 in revenue. Why are you paying 75 times revenue? Usually companies don't do an offering at earnings, usually. I like this short better now because earnings kind of separate, the pretenders from the contenders. I mean, they don't have good earnings. I mean, how are you going to really... So last year's Q4 was the 28th. So that's probably next week, right? Did they announce the date yet? They haven't even announced the date. Okay, they announced the 26th. Yeah, I think it's going to be rough. They've already told us they're going to have a good quarter, but how are they going to give guidance that's reasonable? Anything less than 100, the stock will probably sell off because the stock's up so much. They can't. They give just what the street expects. The street's expecting 80. But the problem is their last quarter, they're going to do 11. So they'd have to go up from 11 a quarter to 20 a quarter. And they're probably not going to do that in one shot. So they're going to probably do, if they can go to like 12 or 13 or 14, but then the next quarters have to be even bigger to hit the 80 number. So I think there's a good short in earnings. Yeah, the street numbers are way too high, but the thing about Wall Street is like, when the street numbers have to go down, usually stock goes down too. There's no penalty, but just like when the street loses trust that managements, can grow, that's usually a really nice short. And if they guide to 70, again, you're going to have to ask yourself, why am I paying 100 times sales for this company? And the sales are like pretty shaky. Like the sales are they're not really product sales. They're like kind of these wishy-washy contracts that may or may not come back that are super low margin. So I think most people, I think that's going to keep happening. Like when CFOs look at their balance sheet and they see the IONQ, whether it's Amazon or whatever, and they say, well, why do we own this thing? We sell this? It's up a lot, John. Don't you think we should get out? Like, yeah, let's get out. BlackRock basically had to buy a ton of IONQ because basically its market cap went up. So they basically had to buy, no human being said, I want to buy. It's just that because the market cap went up and it's an indices, they had to buy more. And now I think we're going to see the opposite. There are any institutions that bought. Susquehanna bought a little bit. The Chevy Chase people bought. She's been talking on TV about it. I think is going to be a baggie. The rest are all kind of quants that bought it. I don't see anybody with a brain that bought it. Let's look at Rigetti. Bessemer was a VC investor in Rigetti. They dumped it. Mostly quants added to the stock, and they're going to sell on the way out. But yeah, Deere sold their whole position. That's kind of nuts. I just looked this up because I wanted to check. Somebody in the comments said Deere sold all their stock, and I was like, no way. And yeah, all the 13Fs came out. I don't pay attention to Deere management. Well, yeah, Deere sold 21 million shares. So basically said we're not DEERE, but DEER. And then a couple of other funds just got out completely. So I don't know. We'll see. It's an interesting situation to say the least. Yeah, I think we're gonna see more blood shed today. But yeah, let's look at most. see what's going on here. All right. Most traded by shares. Intel number one, up 10%. NVIDIA, Supermicro, up 12%. Grab, up 9%. Recursion and SoundHound, two like AI meme companies, both up. I guess the bull market's not gone yet. Palantir, Archer Aviation, kind of another meme company. Lucid, another meme company. Big Bear, meme company. And Rigetti, a meme company. Plug Power, like the definitive meme company. Oh, there's Allogene. SoFi, Walgreens, D-Wave, Tesla, GCL, Alibaba, NEO, Rivian, Ford, Nebius, IONQ, and Tilray. A lot of meme stocks and the most active. Let's look at gainers. Oatly. No, that must be a reverse split. Oh, geez. What a mess. All right, so GCL Global Holdings. Don't even know what these guys are. Allogene, GeneDx. Nice. GeneDx up 37%. Amazing. I know some shorts were in that one. WeRide, PureCycle, Oscar, Yatsen, Pagaya, Luminar, Navitas, H&E, Valmont, Hyperion X, Lemonade, Valneva, X Financial, whoa. Wolfspeed, nothing to do with Elon. American Axle, Adecco Agro, Wolfspeed, Supermicro, Innodata, China Yuchai, and Phoenix New Media. What's down today? Nexon. Wait, is that Nexon the game maker? Genomics, Arcus, perennial loser there. Geldwen, Donnelly, 36KR, Great Lakes, Herc, Aurora Innovation, Kingsoft, Exchange Tech, Endeavor, Fluor, big industrial company, Blackbaud, CNF Finance, Digital Turbine, Bilibili, IQI, Limbach, Fortune Mining, NAS Technology, Treehouse Foods, Medtronic. Wow, Medtronic's down 7%. Cornet Digital, and our good friend, Rigetti Computing. All right, by volume, Tesla and NVIDIA lead, traded about $14 billion for NVIDIA, $8 billion for Tesla. Meta, Palantir, Supermicro. Supermicro traded $4 billion, which is a big part of their market cap. Apple, Intel, Alibaba, Amazon, Broadcom, Microsoft, AppLovin, traded around $2 billion today. Alphabet, Netflix, AMD, Taiwan Semi, MicroStrategy. MicroStrategy traded about $1 billion. Berkshire, Alphabet, Coinbase, Robinhood traded $1 billion. Micron, Tempest AI traded $1 billion as well. Pretty wild for Tempest. Only a $14 billion market cap. Traded $1 billion. Pretty unusual. But yeah, SMIC, about 10% of the market cap, 12% of the market cap is traded today. And then United Healthcare. Rigetti usually is not on the value traded.